Good morning, America. Hubert Johnson here with Guardian Tax Law. And thank you for watching this Smart Money channel or smartmoneyculture.tv. And today we're going to be talking about sales taxes, and we should be able to get to property taxes as well. So how does that affect your business? What responsibilities do you have for sales tax? How do you take care of this now? This shuts businesses down. This is very brutal for anybody that has a business where you're selling goods and you have to manage this. So we're going to talk about all aspects of it, and what do you do if you do end up owing? So how do you address that? So I'm excited about this because it is a little bit different, not a normal topic, but we see all kinds of people that have these issues, ranging from a few $1,000s, but usually 10, 20, into the hundreds of thousands of dollars. Welcome back, everybody. Sorry for that abrupt stop. I did go in and then all of a sudden, time for a break. So we're going to dive into sales tax, but before I just want to dive into some of the news that's happening out there in the economy, but especially considering taxes and what kind of issues going on. So the IRS, and this is something that most people aren't going to really care about, but it's important to know. And it gives you some information about who is running the IRS, who's in charge. So the IRS announced a new head for their criminal investigation divisions, Guy Fico, and he's been there forever, which is why he's been appointed the head of the agency. He's overseen a staff of 3,200 criminal investigators, and then 2,200 special agents. So what do they do? What is criminal investigations in charge of at the IRS? This is where it's important because it tells you what they're looking for, what they're going after. So money laundering, tax crimes, so fraud, public corruption, human trafficking, drug trafficking, cybercrime, and terrorism financing. So they're trying to follow the money and mostly go after criminals. Now, are there times where people are involved in tax evasion? They're involved in ripping people off or trying to rip the government off? Absolutely. A very common thing that I've seen is tax preparers. If you go to a tax preparer and all of a sudden they're giving you a much larger refund than you've ever seen before, and they promise you the sun, moon, and stars, and it seems too good to be true, probably is. So there are times that someone's with a tax preparer and they just don't want to claim a lot of deductions or exemptions because they're overly cautious. And that's probably not who you want to be with. You want to find someone that's middle of the road, that they will claim and they will fight for you. But at the same time, they're not going to go after every last penny and bend the rules, etc., because then you can get into a lot of trouble. I've seen this happen to too many people. The typical thing is where someone says, "Oh, I specialize in helping police officers or firefighters. This is my specialty. I know how to handle these." I've seen that time and time again where whole departments get defrauded by a tax preparer, and then they try to disappear or they get caught. And when they're defrauding all kinds of people that have to deal with the mess afterwards, the IRS really comes down hard on them. And it's a tax preparer that can be sent to prison. I've seen it happen. But you still have to deal with the taxes owed if you have someone that's filing fraudulent tax returns. So they really go out. So tax fraud, money laundering, identity theft are all things that they go after. And they have a 90% conviction rate when they charge somebody. Now, why do they have such a high conviction rate? It's because they only charge someone when they have a case put together. So the criminal investigations puts the case together, they build it up, and then they take it to the federal prosecutors. And the federal prosecutors take a look at it and they say, well, is this something I can win? So they only want to take the cases. So the IRS does a lot of investigations. And when they do move forward with the case, they're going to be very sure or feel very confident about their case. So this is why it's important to not even get on their radar. You never want to be, you don't want them looking at you, don't want them considering this. And so this is something that we're going to talk about today with sales taxes, how to avoid the attention of the IRS. So one other thing that I want to talk about here is what's happening in the economy. So the House and the Senate, the House passed a version yesterday, and it's going over to the Senate. We'll see, again, we have another deadline coming up next Friday, and we'll see if they actually do something long-term about the budget, or again, if they just kick the can down the road, or if there's going to be a budget shutdown. So it's hard to tell. But Dollar Tree is a very well-known discount store that actually, and this is from CNN.com or CNN Business, you have competition, so Family Dollar and Dollar Tree are closing 1,000 stores. They just announced that. And so that's going to be all across the country. Part of it is competition with other stores. Part of it is inflation. Part of it is rampant theft, which is happening more and more stores, especially, stores that cater to low-income people. It's a plague today. And one of my own sons worked at a Bed Bath and Beyond, and so he said that people just walk out with stuff all the time. He couldn't believe it. So it really is a plague on our society, and it's hurting and shutting down a lot of businesses. So again, our options and what's happening in the economy is reflected by not only inflation but crime, and it really takes its toll. So want to spend most of the time focusing on the topic for today, sales tax. So who collects sales tax? Or what is sales tax? First of all, sales tax, we see it all the time. We pay it all the time. So if you go and you buy a pair of jeans for $40, when you go check out, you're not paying $40, you're paying $42 or $43. And that additional amount added to there is sales tax. So anytime you go and you purchase anything, except for certain services, there's always sales tax added. So the government has made business owners responsible for collecting the sales tax and then paying that money to the state. And so I'm going to take a step back. So if you are a business owner, or you're opening a new business, first of all, how do you know if you even have to pay sales tax? Do I even have to deal with this? So really what you're looking at is, there's only 5 states that don't have sales tax: Alaska, Delaware, Montana, New Hampshire, and Oregon. But pretty much, and then you can have cities within the state, even if the state doesn't charge sales tax. Many cities and municipalities or counties will charge a sales tax. So if you need to if you're not sure if you need to pay sales tax, talk to someone, because the last thing you want is to have a requirement to file or pay sales tax and collect sales tax and not do it. The worst thing is to not collect sales tax from your customers and then find out, oh my goodness, as the business owner, I have to pay it because I didn't collect it. So, and not only are the fees very nasty, 30 to 50% over time, but also there's potential jail time on the table for sales tax. Doesn't happen often, but it is a possibility if you are dodging sales tax, if they detect fraud, And this is done on a state level, not the IRS level. But again, when they detect that fraud is occurring, or that this is done purposefully, this is where you can get in a lot of trouble and face even criminal penalties. So avoid this like the plague. It's not worth it. So you're sitting down and you have to ask yourself a few questions. If you're in a state, you have to, before you start selling, you need to find out what the laws are. Each state is different. Each locality can be different. So I know I'm in Tucson, Arizona. If you're within the city limits, there's additional fee for renting property out. There's all kinds of local taxes that can apply as well. So you have to check with your state, your county, and city to see what kind of sales taxes you're responsible for collecting and paying. Does it apply to your business or not? Getting a permit, so getting registered with the state or the county or the city is very important. You have to get set up with them before you sell anything. Now, if you start off small, out of your own home, you still need to research this and find out about it. But again, if you haven't been doing this, find out. Put the time in, do the research, and find out, what your responsibilities are. Get on top of them, stay on top of them. And each state is different, so how do I even know if I'm responsible for paying sales tax? So typically you need to pay sales tax on goods. So if you're selling something, especially anything that you created, you manufactured, or like on Etsy, you get materials and you put something together and then resell it. So if you purchase something and then you change it and then you resell it, be aware of any trademarks or anything like that. But there are plenty of people that do things like that. And whenever you're selling any kind of goods, be very aware. What is typically exempt from sales tax? Services. So any kind of legal services, professional services, you're going onto their property, you're fixing something. But if you build something and then sell it to them, if it's a finished product you're selling or it's a service you're providing, that's a very distinct thing. So when you go into an auto mechanic, if they sell you, they sell you the parts for your car, that's what terms. Then there'll be a sales tax on the parts, but not on the labor. So that's why they differentiate that and separate that out. So the labor as a service doesn't have a sales tax, but whatever parts and equipment they sell you absolutely does. So we're going to be right back, have another break here, and we'll be back in just under 4 minutes. Welcome back, everybody. Thank you for watching Taxes Made Easy here on the smartmoneyculture.tv. Thank you for watching live or on rebroadcast. So there's a plethora of shows. If you have questions about a specific topic, feel free to look that up. Or you can reach out to us through guardiantaxlaw.com or call us at 520-485-7371 to talk directly to a tax attorney. So continuing with our topic of sales tax, just want to kind of explain a little bit more. And again, these rules vary by state. So what is actually taxed? You have to look at your state rules, and generally it's any kind of physical item that you're purchasing. So furniture, toys, clothing, even antiques. and anything. So if you ask for a custom item, if you ask for someone to produce something, that's different. If you take a watch into a repair shop, though, what are they charging you for? The labor to repair the watch. They're not selling you a watch. If they got the watch and redo and they sell you the parts to fix the watch, that's different. They'll get charged on the parts, not the labor, same as with a mechanic. Now, typically, food is not taxed. Now, that's something, again, it varies by state. That's a general rule, but you have to check state by state what is taxed and what isn't. There are states that are looking at taxing many different new kinds of taxes. So there's all kinds of additional taxes, even though it's not typically a sales tax. So when you go stay in a motel, hotels are definitely taxed. Depending where you are. In Las Vegas, Nevada, they absolutely have an additional hotel tax, and most places, most states do. So depending on what kind of business you have or what kind of services you're offering, check and make sure with your specific industry how to handle these, because the last thing you want to do is not collect it and then be responsible for paying for money that you haven't collected. So one thing I do want, pardon me. One thing I do want to touch on here is that while the federal government does not have sales taxes, they do have what's known as federal excise taxes. So on certain products, the federal government will tax it. Classic example is gas. You go to the gas station, doesn't matter where you are, there's usually a state tax and a federal tax. Almost always, you'll always see a federal tax because it's nationally, but you'll usually see a state tax tacked onto it. Alcohol, cigarettes, airline tickets, and then there's other goods and services on top of that. But check with your industry what kind of taxes you need to withhold. In rare cases, it could be the federal government as well. So do your research, do your homework before you start selling. And then, so with sales taxes, that tax just gets added onto what the customer pays. So if they go in, plunk down $100 for gas, the sales tax is already built into it. Or if you're going to if you go to a store and you buy clothes for $100, then you have that sales tax added to it. Now, with an excise tax, you don't see it like gasoline. The federal tax is already built into it, and the final price is the final price. Same thing with airline tickets. They tell you the price, and then they might give you a breakdown of the fees that go with it, but usually it's just the final price for the airline tickets. So sales taxes are more obvious because it's a percentage added on afterwards, but when it's an excise tax, they tend to hide it a little better. So how do you start? You're a new business. You're out there trying to figure this. How do you actually get started? First of all, you have to have an EIN, so an employer identification number. They're not that hard to get. You can get them pretty easily from the federal government. And then once you have an EIN, again, the government gives them out pretty easily, but you have to take care of it as long as your business is open. Can you switch EINs within the same business? Yes. But you have to have that number to go and then get a sales tax permit or get registered with the state. Once you get registered for the state to pay sales tax, then, or the city, whatever, whoever's collecting sales tax, then you can get that information directly from the state. So real quick, we're going to go to a website and just show you this real quick. So this is a quick website Shows you everywhere you click on whatever state, and it will give you all kinds of information: file, pay, register, da da da. How do you get set up with their comptroller? Again, it's set up by state. You just click on a different state, and it gives you all information: tax forms, local government services, and then the contact the department. This will give you the contact information for pretty much any state that you want. And this is taxadmin.org /FTA members / so Federation of Tax Administrators. So again, very kind of a handy little thing. You can click on whatever state you are in, and it will help you. Don't forget though to check with your city, with your county as well, and see what additional taxes might need to be withheld. So this handy little website can help you out as you're getting started and figuring things out. Okay, and then once you get registered, the same sites, you should be able to see what tax rates you should be holding. Now, you want to do this and make sure this is done correctly, because there are so many point of sale services where they make it easy because they automatically will collect the tax rate. Now, these are just machines and programs which can be imperfect. So when you first start, I would make sure that it's correct. Do some research, talk to someone that is familiar with the local laws. But then the point of sale, whatever product you're using, will automatically figure and charge your taxes in there. And then once you start collecting that sales tax, you have to set that aside. Biggest problem people run into: poor record keeping. And if I've sounded like a broken record about this, it's because it's important. It's the number one thing that hurts businesses, gets them in trouble, is not having good records of what your sales were and what happened to the money. So again, I highly recommend you have a separate account. All of your sales taxes go directly there. You know, the first thing, don't even consider touching it. It just goes directly there, or the program that you have automatically cuts that money. And again, you don't touch it. Whatever is for the business, you move out of that account and leave the sales tax there. Set it up so that you're not going to touch it. The business doesn't touch it, and that will save you. Because what happens when things get hard, when things get tough, people dip into those funds, and then you create a big mess, not only for yourself or for the business, but for you personally. We're going to get there as we go through this. So have that point of sale program. Make it easy. Just make sure, verify that they're doing it right. And then have a good point of sale and have good record keeping. So how do you have good record keeping? Use QuickBooks. Use not only QuickBooks, use a bookkeeper to handle that. If you're small enough, you might not need a bookkeeper, but you can always run it by a bookkeeper. And make sure you have confidence in your bookkeeper. So there's no excuse. I mean, it happens all the time. People don't know. They're learning. They're trying to do it on their own. I shared the story where the gentleman had the custom copper roofing business, and his wife ran his books. She wanted to help. They wanted to keep things affordable, but again, they ended up with $250,000 of debt because she didn't know what she was doing. She was doing the best that she knew how. But again, it created a huge issue for the business, created a huge issue for them personally. They were able to handle that. But again, there was a lot of penalties and interest that went with that. So again, get a good bookkeeper, use a good CPA, They do not have to charge an arm and a leg. If you can't find somebody that's reasonable, give us a call and we'll connect you with someone that is reasonable and can help you out. But again, it's not going to be a couple $100. It's going to cost over time to make sure it's done right, but it will save you so much headache in the long run. So paying and actually remitting those to the state, most states require that you file reports or regular returns. Here in Arizona, they're called TPT returns, and you have to do it monthly. So it's just a simple printout. If you have good records, it can be very easy to just submit the records every month and the taxes with it, the sales tax with it. Again, check with your local states. Some require a form every single month. Some don't require a form as long as you're paying it. But again, having that information for the sales is something that almost all states require, including tax-exempt organizations or transactions. So you have to provide that information to the state. So the more you sell, the more often you have to pay those, because the states don't want you to fall behind. So, and like I said, it varies by state, if it's by quarter, by month, or even more often if you have a high volume of sales. There can be some discounts if you pay early and regularly, if you have all that stuff together. But on the other hand, late payments, not only will you get hit with penalties and fines, can be 30 to 50% of the original tax, which is pretty hefty. But by paying your sales taxes late, and especially doing it on a regular basis, you are painting a target on your forehead. And you're telling the state government to audit you. You're saying, look, I don't have my stuff together. I'm not doing this well. And I'm not staying on top of this. And it's the most common reason why people get audited. So as far as an audit, you really don't want to have to deal with an audit. So again, an auditor will come out, they'll start looking through your books, they'll try to make sense of what's going on, and the more convoluted, the less organized your books are, the nastier the audit's going to be. And if they show that, look, you don't have a clue what you're doing, or they sense that this is being done intentionally, that's why the penalties and fees will really get piled on, and then you can face criminal penalties if they detect that this is being done willfully. Now, willfully is a legal term, so if it's done by extreme negligence, you can reach that willful standard as well. So be careful, do this right, get good tax professionals to help you through this, because it's absolutely not worth the pain on the backside. If you have to deal with an audit, then you have to hire tax professionals to come in and handle and clean up the mess and try to limit the audit and deal directly with the auditor, because this can get nasty fast. They can start with one period and then expand the audit to more and more periods, and the fees and the penalties just mount, and that happens quickly. So late payments can cause all kinds of trouble. Just as a big takeaway, you do not want to pay late. You want to pay early, and then you can have what's called, the federal government can get involved as well and impose a trust fund recovery penalty, which means you were supposed to withhold these taxes, you didn't, and this can make you personally liable. Now, most states will hold the business owner personally liable for sales taxes. So it doesn't matter that it's under an EIN. You are responsible for withholding these taxes. It's money you actually collected, or you should have collected, And so there's not a lot of wiggle room here. So if you owed sales taxes and you didn't pay it, yeah, again, you get straight on this, get this cleaned up. Cannot emphasize this more. This is not something to play around with. So how do you know what's going on in your industry? What kind of updates happen? So first of all, work with tax professionals. Tax professionals should be getting regular updates. They should be paying attention to what's going on. You can also, with your state, ask for updates. You can just go on Facebook. You can sign up and get regular updates from them. You can check IRS News, the newsroom. That's one thing that I've been getting a lot of my stories from, is IRS News, and then I check other websites to try to present that information to you as part of this show and help keep you updated as to what's going on. You can also subscribe to different newsletters and updates, and but again, either you should have your professional making sure you're on top of it, or you need to do that yourself. So we're going to switch gears here a little bit for this last section. If we do get to property taxes, it'll probably have to be tomorrow, just because there's so much here with sales tax. If you do end up with a problem, what do you do? What should you do? Call a tax professional. Now, sales tax is a very specific niche, and you need to be talking to someone that specializes in sales taxes. A lot of your normal tax debt resolution companies don't handle sales tax, and you need to be clear with them what kind of tax you have, what kind of tax balances you have, because someone they'll take your money, they'll bring you on board, and then say, "Oh, we don't really handle that," or they'll try to handle it, but it's not their specialty, and they really don't know what they're doing. So again, that becomes a big problem when again, you're trying to handle something that you're not familiar with. So if you are behind, number one thing, stop the damage. So get straight, get current on again, remember, filing compliance, payment compliance. That really is forward looking. So with any kind of taxes you're doing, that's one of the first things they want, is change what's happening so that you will not owe moving forward. We're coming up on another break in about 30 seconds. So again, just starting this, talking about what to do, how do you clean this mess up, and we're going to go into this in detail when we come back. But again, this is I've heard too many horror stories when one company owed over $200,000 from almost 20 years ago, and they had been avoiding this, and he couldn't do much this entire time. I'll share this more in detail after the break. Welcome back, everybody. Thank you for watching Taxes Made Easy on the smartmoneyculture.tv. And I was about ready to share a story, true story. Someone, they owed sales tax on one business over $200,000, and it was under the husband's name. So what did they do? Of course, did they deal with it? Did they deal with it head on? No. They went and they took everything out of his name, put everything in his wife's name. So he didn't own any vehicles, he didn't own a home. It was all under his wife's name. Now, Nevada's a community property state, so if they really came knocking, all of those transfers wouldn't have done him much good. So again, they had this huge mess, and they were trying to wait out over 20 years for this tax debt to become unenforceable on the sales taxes for this company that he was in charge of and ran. Now the new business, it's under his wife's name, did things a little bit differently, but again, if the government pushed him to shove, they could say, look, we want to, they can say, look, you're doing the same thing just under a different business name, and they can pierce the corporate veil, so to speak. They can take those old taxes and make it follow to the next EIN. So they've seen it all over time. The question is, will they catch it? So the funny part was that under the wife's business, they didn't change their practices. They still had the same habits, and they owed again. So this time over 100,000, and it was climbing. And so they realized we need help. First of all, they didn't want the state of Nevada to connect the really old business to the new business that owed again. But they needed to deal with the new business because all of a sudden they have another mess popping up. So I cannot emphasize enough, when you are moving to change and deal with sales taxes, you have to change your strategy. You have to change what you're doing to make sure you are not going to owe moving forward. You can usually do something about the past due taxes, but if you want to keep your business open, you have to put a plan together, you have to organize, and you have to get in there and make some fundamental changes to how you conduct your business to make sure that you do not continue to owe. And once they see someone that continues to owe, they're not going to give you a deal. They're not going to work with you until you can show that you are paying your taxes in full moving forward. So again, I've said this so many times. It is more important to be current on the current tax year, or start filing and paying, for the current month, for the current quarter, wherever you start where you are, and don't owe moving forward. The damage is already done on the past due taxes. We'll have to set that up, see what we can do. But moving forward, you have to make sure that you're not going to owe. Number two, you have to file your tax returns, all your missing tax returns, and get current on that. Now, you can usually breathe a little bit if they show that you're paying your taxes moving forward and that you're working on getting those tax returns. That'll give you a bit of breathing space. But you've got to make sure that and show them that you're working to fix the problem. And this really carries over. This is the similar things that I say on other tax issues as well. Even personal taxes with the IRS. You've got to show that forward progress. You've got to show that you're taking this seriously and that you've changed what you're doing. So you're doing something different. You're not going to owe moving forward. Again, I'm repeating myself because this is so key, so important. Once you have a plan in place and you're showing that you're not owing moving forward, then you can go and talk to the state, the city, county, whoever's collecting the sales tax, and negotiate out some kind of installment agreement. And it needs to be to pay the balance in full over time. You've got an open business that's running, and what is they consider is unfair if they give, corner shop A an advantage compared to corner shop B that's actually paying their sales taxes. So they have to look at it and say, look, you have to have fair competition here. We can't favor one company over another. So that's why there's pardon me, there's not a lot of relief when it comes to sales taxes. Now, once you start paying something, the voluntary payments on back taxes are huge. So even if it's not as much as they want, making some kind of voluntary payments on this can really win you a lot of goodwill. So again, it's two separate things. You're going to get on track. So you're not moving forward, but now we're talking about so you're not going to owe sales taxes moving forward. You got that taken care of. And then make voluntary payments on the back taxes, what's already owed, until you can set up a repayment plan. And you want to get on a repayment plan because then it usually lowers the ongoing interest and penalties. And then you have to show that the business can afford to handle that. So if you have a business that's struggling, they can't make the payments moving forward and pay the back taxes, sometimes you have to sit down with your accountant, with your professional team that you should have supporting you, or maybe it's just you and your bookkeeper, or you and your CPA. You need to sit down and say, okay, is this a viable business moving forward? And I do the exact same thing. It's one of the first things I do when talking to businesses that have other kinds of tax debt, payroll, income tax, any kind of balances on this. Can the business, first of all, you want to stop owing, because you moving forward, it saves you on the penalties and interest moving forward. But if you do decide to close down the business, it will follow you, the owners, personally. So again, you want to make sure that you at least stop the damage, limit how much you're going to owe moving backwards, and then you have to sit down and say, can we set up a payment plan? And can we afford to do that they will accept to pay the balance off in full? And sometimes they'll give you 4 to 6 years to do so. But again, it depends on state, depends who you're talking to. If you feel like you can manage it, you might consider a personal loan to deal with this. And again, good faith is very important here. So once you get on top of this, once you get professionals helping you out, making voluntary payments until a repayment plan is set up is very important. So what if you can't, the business cannot afford to pay it? There's just not enough profit. The business is struggling. Now, you can make this decision. You don't have to make this decision right away. So this is a big thing. And one of the things we do is we try to save businesses, and we do save businesses all the time. But there are businesses that just are struggling. They're not making it in this economy, or the economy has changed. There's a dozen reasons why people need to close down their business. And if it's not supporting you, if it's not paying what you need to survive, you might need to consider doing something else. So the interest, what happens if you don't pay the sales tax? Penalties and interest can, generally be from 5 to 50%. Over time, it's probably closer to 30 to 50% of the balance due. You can have liens placed on your business, on your personal account, and it will be much harder to get a loan to address this, a personal loan, and get ahead of this when you have liens placed on you and your personal business. This will affect your credit and cause a lot of damage. So deciding to close your business, if you do decide to close your business, again, there's personal liability for the owners, and it doesn't just go away with bankruptcy, because these are funds that you collected, you had in hand, but didn't pay to the government. So again, the only way to escape sales tax debt, there are a couple ways depending on the state. If it sits there long enough, it can become unenforceable over time, depending on the state. So you have to check. Each state is different. Some states it's usually 20 years, but there's some states where it can be longer than 20 years, or doesn't expire at all. Another option is, and this is something we've done especially with New York, is that if a business tax debt is old enough, including sales tax debt, we have done successful offer and compromises with New York and settled hundreds of thousands of dollars of sales tax. So talk to a professional, find out what your rights and options are. And again, get that information, because it doesn't just go away. It hangs around, again, for 20 years at least. And restarting a business, or like that one couple that had that really old debt in Nevada, he couldn't have bank accounts in his name. He couldn't do anything in his name. So they had to play this game where everything was in his wife's name. But if someone at the state took a close look at what they were doing, it was going to be bad and, go downhill very quickly. So, name of the game here, protect yourself. Do things the right way. If you're starting out, take that time, do your research, talk to a tax professional, a CPA. What are my responsibilities? Go directly to the websites. And again, talking to the government is very hard to do, but there's plenty of information online. And the smaller the municipality or the taxing agency, you might even be able to go in and talk to somebody and say, hey, this is what I'm trying to do. Businesses start all the time and they want to help businesses do it right from the beginning. So if you do start getting in trouble, there is a way out, but you have to do that before you create too big of a hill for your business to climb and get out of. And if things are struggling that bad, you have to be serious with the situation and sit down and consider the option that you might need to close the business. It's tough. It's tough to make that decision. It's tough to sit there and say, well, maybe I need to do something else. But if it's really not working for you, you have to switch things up. We have a business right now where the owner owns a ranch and she doesn't want to close it down. Does not. Absolutely not. Now she owes over $500,000 to the IRS. She's got state issues as well, hundreds of thousands of dollars owed to the state. And she's taking a personal loan out to save her business. And refinancing the ranch in the process. Now she has to pay $9,000 a month to pay this personal loan for 2 years. So that is a very difficult decision. Can we do this? She's going to try to make it happen. But I was getting there, and I don't think I quite got there. You can always choose to try to keep your business open, see how things go, give it a while, try to keep it open. And if it doesn't work out, if it's just not working out, things don't turn around, the money doesn't come in, you don't get the clients or income that you're expecting in, you can then make the decision to close the business, wind things down. Just if you do it in an organized manner, especially with good advice, good tax advice through this, it can save you a lot of heartache. It can give you time and peace knowing that you're doing what's best for you and your family. And move on. Most businesses don't last 20, 30 years. It's just reality. Doesn't mean it was a failure. If it provided for you and your family for 10, 15 years, I would call that a success. So again, if you have questions, look us up, guardiantaxlaw.com, or call us directly at 520-485-7371. And you can always reach out to the producers here at the show at the smc.tv here in the corner or smartmoneyculture.tv. And in the top right, there's that button, opportunity button, to connect directly with us through the show. Again, if you have more questions, reach out to us. There was a lot to cover in sales tax. We didn't get to property taxes at all, so that'll be covered tomorrow. And again, I hope this helps you. This helps your business. And again, saving livelihoods and saving businesses has been, that's part of my why as to why I enjoy doing what we do here. It is very important, but when you have to make an informed decision. Is this what's best for me and my family long term moving forward? So again, reach out to us. Have a great day. It's a beautiful Thursday here in Tucson, Arizona. We actually went on a hike yesterday. So again, wherever you are, hope the weather is fine and that your family is safe and doing well. And we'll talk to you tomorrow here on this Taxes Made Easy. Thank you again for watching live or on rebroadcast. And you can find shows on YouTube as well. under guardiantaxlaw.com. Thank you and have a great day.